Hey everyone, welcome back to Fiscal Voyage. I'm Felix, and today's video we're going to talk about my shopping spree that I recently did last week. I bought a lot of stocks, about 6 stocks, and in a few different days. We're going to look at each of those stocks. We're going to look at the fast graph, we're going to look at technical, and I'm going to name the stocks. So first, we're going to look at my orders from Interactive Broker. You can see here, this is my recent orders. This is live account, and you can see I bought SR, EVRG, ADC, O, VICI, Triple N, Starbucks, and more VICI. So this one was on 416, and the other VCI was 419. Starbucks I bought at 416, and then the rest were all 419, 419, 419. So on Friday last week. So a lot of my purchases were about $500 so of shares for each stock besides the Starbucks, because since it was a new position, I opened my normal new position is always around 2 grand when I purchase shares, but the other ones I already own shares, I just adding to my existing holding. So let's start with SR. So if we go to the fast graph, you can see here this company first off is a gas utility company, has an A- credit rating, and only 41.62 long-term debt to capital. Currently has a blended P of 14 and an earnings yield of almost 7, which is great, and a dividend yield of almost 5, which is also great. And as it is dividend grower, and then you can see here earnings has been consistently, once in a while it has a down year. You see here in 2021 it had a huge year of 29% increase in earnings, then it dropped 21%, but analysts are expecting 5-7% earnings growth for the next few years here. So you can see there. So then we put the price on the graph. You can see here it looks undervalued based on a normal multiple of 15.8 or around 16. We're showing this time period. You can see here still undervalued. If it were to revert back to a 17 multiple in recent years, you can see here we have an 18.4% annual rate of return, which is great. So now if we look at the technical, you can see here this is the monthly chart over here, 1 month. Each chart, each bar represent 1 month, and you can see here this is the 200 moving average, and it basically near the 200 moving average. So this is why I'm liking this and buying shares. And right now it looks like it's going to leave a bottoming tail, which is a good indicator that buyers are stepping up, and it should bring the price higher. So we have good technical, and it's also near support. If I draw this here, you can see here this is kind of like that support area here. So this was resistant here, resistant here, resistant here, resistant here, then became support, 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 and then it broke a little bit, kind of like a peekaboo, and then increase, support, support, and now I'm expecting huge support around this $60, $55 to $60. This is why I bought shares of this stock. Is undervalued, and technically it looks like strong support here around the $60 range, so I'm expecting it to go higher. So now let's go with the next stocks. EVGR, Evergene Inc., if I'm saying that correctly, is a triple B plus credit rating stock. Company is also in the utilities sector, but in an electric utility, and it has a 48.6% debt to capital ratio. High earnings yield over 7, good dividend yield over 5, almost close to 5, and you can see here earnings is erratic, but it continues in that upward trend, and analysts are expecting 8% growth for this year and 5% for 2025 and 2026. If we put the price, you can see here it is undervalued based on the fundamentals. The dividend is well covered at roughly 70% of payout ratio, so that's real good for a utility company. And then you can see here if we revert back to the normal multiple around 20, I have a 24% annual rate of return for the next few years. So this is why I bought shares of this company. So now we look at the technical. You can see here is also near support area. So we go here, right there, more or less kind of like right there. This area is support. It was resistance here, had a battle. Buyer step took control. So now support, 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 and support here in this $50 range. Now if it goes to $40, 43, 44, I want to buy more shares, because we have next the moving average, the 200 monthly moving average, which is a very strong indicator of or a strong indicator for support or resistance. You can see here it acted like resistance here, it broke a little bit, but it was kind of more resistance, and then eventually broke out of it. The 13 moving average became support. Just follow the trend, and then it eventually, you know, broke the 50 moving average on the monthly. But now we're in that support area. I had consolidation, so I'm expecting this stock to move higher as well. And you can see here, the fast graph shows it undervalued, and with her earnings continue to increase. So if we go to the next stock, ADC. So now this is in the REIT sector. You can see here, Agree Realty Corp. It has over 7% yields to FFO, and over 5.3% in dividend. Has a BBB plus credit rating, is in the retail REIT sector, and you can see also is undervalued. If we go to maximize frame here, you can see here earnings been great since 2012. It's just been on the uptrend. No negative earnings, just continue to grow, and analysts are expecting to continue to grow at 4% in 2024 and 3% in 2025. But if we put the price back, you can see here is right at the fair value based on long-term time frame. But if we shorten this, you can see here for the past 9 years or so, this stock right now is undervalued with a 14 PE or price to FFO. And if we revert back, we'll have a 21 rate of return annually for the next few years. It will revert back to the 20 FFO multiple. So this is why I bought shares of this stock. And now we go to technically, you can see also this is near support here. This was resistance here and support. So you can see here resistance, it was a battle. Buyer stepped up, took over, support. It was support a few months ago, and then it came back down to this area. Now my next purchase price, if it was to continue to go down, will be around this $50 range, and then next $40 range, because over here you have more support in this area. So and this coincide with the 200 moving average on the monthly. So it would be a great buying opportunity here on the $44 to $40. That would be my next purchase price to go all in. My next one would be here around 50, and then after that I'll wait till it get to 40. So that's what I'll be looking for. But it is undervalued and is at support. So with that, it should go higher because of the valuation, unless we have some dramatic more increase in rates from the Fed. That would definitely bring the stock further down. The same thing with the other three. So the next one, if we go to here, and then my next stock is Realty Income. I'm pretty sure you guys are familiar with this. Is a monthly dividend paying stock. This stock has been consistent for a very long time, just continue to grow earnings and continue to pay out a monthly dividend and continue to increase its dividends. This is why I love this company, and I bought more shares of it. It has an A- credit rating. It has adjusted FFO yield of over 7.6 and almost a dividend yield of almost 6%. So you get paid monthly about close to 6%, and it increases. And then you can see here, the price is undervalued. It has a normal multiple of 18. So if right now it has a blended multiple of 13, if the stock were to revert back to that 18, we'll have 21.3% annual rate of return. So this is why I bought shares of this stock. So if we go here again, back to the technical, you can see here it actually bounced here. This is a good visual here. You can see how the monthly support or the monthly moving average is very strong. The monthly 200 and the 233 is what I have here. It's very strong. Bounces there, bounces here during COVID, just went right in, boom, you buy shares there, and then you make 100, 200%. So I bought some shares here, and then I bought shares recently this Friday. So again, why did I buy shares? It's near the moving average there, and it's undervalued, and it's near or at support here, which is, I would say, around this level is kind of like where the support is, over here, resistance, support. It broke a little bit, but then it acted as support here, and then it broke here, but now we have it here. So if it gets over this $55 range, it should increase the price higher. But if not, I will be buying more at $45, and then eventually at $37-40, buy a lot more, because this will have a yield of, you know, close to what, 7%, maybe 8% at this level, maybe even 10%. I'm not sure, but you guys could do the math there. But this is why I bought shares of this stock. Again, undervalued and has potential. Even if it went back to 15 multiple, look at this, 13.3%. That's, you know, I'll take that every day. So the next stock is VICI. This is also a REIT. This is in the entertainment industry. So like Caesar Palace, and a lot of their real estate is in Las Vegas. You can see here earnings has been growing very nicely, double digit the past few years. It is expected to slow down at 5% in 2024 and 4% in 2025, but is undervalued, has a 6% yield, 7.82% adjusted fund from operation yield, and a BBB minus credit rating, and, you know, pretty good long-term debt to cap of 38.5. And if it were to revert back to its normal multiple of 16, we have an 18.3% annual rate of return for the next few years. So this is why I bought shares of this company. So if we look at technically how this stock is, technically it doesn't have too much because it was IPO in 2017, so we don't see too much of a time frame. But you can see it here very clearly. This is where the support area is, right there. Actually, let me, yeah, kind of right more or less right in this area. You can see here it dropped here, it broke, it increased it there, it held this area, then it held this area again, and then now we're at this area again at $27. So this is why I bought shares. So my next level of share will be, or purchasing more shares, would be kind of like around this level here, because this was resistance right here, this was resistance here, resistance here. So this $24, maybe even $25, I'll buy more shares. So I will wait if it were to go down, but this is why I bought shares at this current price around the $27, because it's undervalued. Even if it were to revert back to a 15, get 15.16% annually for the next few years at the current growth rate. You know, wow, even if it doesn't grow there, it could stay flat. I'm getting paid, you know, almost 6% annually just by holding the stock and collecting this dividend. So this is why I purchased shares of that. So the next one is another REIT as well, Triple N. You can see here, this is another great company. This been increasing earnings since 2011, and earnings are expected to continue to increase, you know, but a modest rate of 2% to 3%. But I'm okay with that because it's undervalued. Right? Even if it to revert back to a multiple of 15, you can see here we have a 15.64% annual return for the next few years. So that's still great returns. BBB plus credit rating. You can see here adjusted fund from operation yield of 8.2, which is great compared to some of the other ones where it's 7%, which is still good, but this is 8.2. So this is why I bought shares. And if we revert, look at the technically why I bought shares, and you can see again why I like the monthly 200 moving average. You purchase here in 2008, 2009. You purchase here during COVID. You purchase here during this recent sell-off, and this is why I like the moving average here. You know, if it were to revert back here, I buy more shares at $35. You can see here support is in that area here. You know, this is the support area right there. And then the next level will be right here, kind of right there. That'll be the next level. It's $30 range, is where if it were to crash here, this will be huge buyers stepping up here around $30, because it will make it extremely undervalued. It's undervalued now, and this will be extremely undervalued, kind of like the other ones that I mentioned. So that's why I bought shares, and I would buy more around this $34 if it were to pull back from the current price around $40. So this is why I bought shares. So again, undervalued, you know, BBB plus credit rating, so good credit rating, good financial balance sheet. So overall, great company there. And last but not least, Starbucks is a new position. Why did I buy Starbucks? So first and foremost, you can see here earnings has been outstanding since '04, growing double-digit rate. It had minus earnings of negative 59% during COVID, which is understandable, but it picked up the following year, and analysts are expecting double-digit earnings to continue. So this is why I bought shares. You can see here, we're showing this time period. It's not under the orange line of 15 multiple, but it's way under this normal multiple of 29, which I think is too high. I think this should be worth kind of like around the 20 multiple, 25 multiple. Right now it is at 22.9, so this is why I didn't go all two in, because I made a video of it recently. Make sure to check that out. But it is a triple B plus credit rating, has a nice 2.6% yield, has tremendous dividend growth. So this is why I bought shares, and it is under this, which is not good. This is why in my previous video I said it could go low over here to around $80 and then as low as $70, because $70 is strong support. Right over here we can see here, and kind of right there, this is strong support here. The support here is $65 to $70, strong support. So this is where I'll go, make this a big part of my position, big part holding of my portfolio at the $70. So I just kind of enter here to kind of get started, just in case it goes up from here. We really don't know, so this is why it's a starter position. And if it to go back lower, 74, under $80 is where I'll start adding some more, and then here I start loading up at $70. So kind of like costs averaging in, and then hold it for the long term, because earnings are expected to continue to grow at double-digit rate, which is outstanding. This is why I bought Starbucks and why I opened a position with Starbucks. So overall, I hope you guys enjoyed the video. Let me know in the comments, do you own any of these companies, any shares of these companies, or any other companies you think I should take a look at? Let me know in the comments below, and I'll see you guys in the next one. Thank you.